What's going on, everybody? Hope you're doing well. My name is Lamont. I've been a full-time trader for 7 years now, part of the Chart Guys team for more than half of that, where I head up our futures room and our swing report. In this video, we will go over the overall market, cover some hype sectors that aren't really seeing that much hype right now, hit you with some trade zones, update you on some prior ideas and whatnot, and that's pretty much it. So let us get into it. All right, so starting off with SPY here. So if you'll recall from 2 weeks prior, right? Well, I mean, really for many weeks now, what were we paying attention to? We were paying attention to this guy, right? As long as the buyers were able to hold over this little bit of balance that was created from June 12th to 14th, well, then these buyers were going to be okay defensively. And you'll see, of course, that there were multiple defenses of the value area high, point of control, value area high, and point of control. And so the sellers were positioned really well at the end of 2 weeks prior to begin weekly consolidation because the weekly chart looked like this, right? So we had a pretty, doji candle, right? And then the close was in the lower third. So sellers really didn't have to do much in order to press weekly retracement, and they failed. Again, where they got caught up on their failure was yet another hold of this point of control of this local demand zone. So, I've said it before, I'll say it again. This is the key, right? This is simply how markets have to work, right? This is an area of demand, right? That was created. And so as long as buyers are holding over that area of demand, what does that suggest, right? That suggests that there is still demand or perceived demand coming out of that area, right? Perceived demand turning into actual demand every single time you get down there, right? Because there could be new people who are entering the market, right? Whether or not there are old orders sitting on the books that's enough to bring price higher, we don't really know that for sure. That would be actual demand. And then, perceived demand would be like, people who see this hold there and then buy it, right? Like traders in our room, for example. So, yeah. Anyway, that's pretty much it. There's a lot of space now for a daily higher low to be set over 542.52. Anything over that will be good for one. And it's exactly like what we were looking at over here is over here I should say is now what we can be applied to this structure, right? All of this area of sideways is now key demand, right? And this, I got the date range over here. It's 6/17 to July 2nd here. And the most confidence for these buyers would come if they can continue to hold over the breakout point 550.28. That would be the best case scenario. But even if these sellers were to bring price under that level, as long as these buyers can hold over the value area high at about 547.34 and the point of control at 544.72, then this trend is still fine. This on the daily time frame is still fine. So I don't think the trade zone shared last week was a hit. I doubt it, right? Because it was a little bit too conservative here. But if you're still in a runner from this one was shared way back when, you can just keep walking your stops up, right? So your stop can be, I would say, no later than this no change level here, right? Like if you did this trade zone back when it was shared on, I don't even know what week. I assume it was this weekend. I don't know. Either way, if you use this trade zone, your stop can be no later, or I think it would be appropriate to walk it up to under the weekly no change level. And the weekly no change level is just the weekly high, right? So this is the weekly higher high. Here's the weekly no change level. They broke out of it. And as long as these buyers are holding above that level, then obviously this breakout has not yet been negated, right? And as long as this breakout has not yet been negated, then it's reasonable to, because essentially that play was for a weekly higher low, right? This play that was given to in the public videos, I forget, a few weeks ago, was essentially nailed the weekly higher low. So if you nailed the weekly higher low, you're playing on the weekly time frame. So what you want to see now on the weekly time frame is some balance and then another breakout, and then we would be comfortable walking our stop up again. So until that happens, though, it's reasonable to have your stop up under the weekly no change level, because if the weekly change is negated, well then the odds of us seeing another area of balance and then breakout on the weekly time frame are diminished. It's not impossible, but it's diminished, and so you just walk away with a pretty decent trade, right? So anyway, that is pretty much it. So trade zone for next week, hourly oversold conditions into this area. I think that makes a lot of sense. You can even come down into this guy, and we're probably looking for some targets that are, R1 is right there for the month, and then for the year, R3 is a ways away. I think if you're coming into this area for the trade, right? If we're looking for that, essentially a weekly higher low. So basically, this a very similar play to here. Back testing this prior high was for that weekly higher low. I guess we could pull it all the way to here-ish, something like that. I think that'd be fine, right? Let's get some, hourly extension into here. And then for the targeting, I guess we would have to go with the R3, right? For the year. It's a ways away though, so we'll probably look to peel out before it, but holding a runner to try to get all the way to 600, I don't think that it's lofty. It's a lofty goal, but I don't think it's too unreasonable, especially right now the fear and greed index is still pretty neutral. Last I checked at least. Which was not at the end of the day. So for all I know, it's flirting with greed now. It's flirting with greed, right? But it's still not hot and heavy. It's not like it's hot and heavy on the oscillators right now, right? But bigger picture, are things hot and heavy? I would say no, right? Like you don't really have a lot of fervor in the market. I mean, outside of like regular market participants, you're not like seeing a lot of friends or whatever talk about the markets. You're not having like a lot of ICO craze. I mean, not ICO, that's crypto, right? IPO craze. You're not really seeing like a whole bunch of IPOs go crazy. You're not a lot of people saying things like it's never gonna come back down. This is it. That's kind of the energy, right? That marks top, right? So as of right now, I would say it's not present. So I think while this is like, it's for a weekly higher low. You're looking for continuation. We're playing to potentially, another 60 points higher, 50 points higher. I don't think it's unreasonable right now. Like if things were to start changing very quickly, if we were to start taking out these areas of demand on high volume, okay, we're probably looking at like a retracement, that at least like an intermediate retracement, right? But again, major market tops typically don't occur when there's like, still a lot of bears out. Like when a lot of bears are like calling, this is the top or whatever. That's not usually the case. So yeah. So anyway, I think this is pretty reasonable. Get hourly extended into this guy, play for another weekly higher low. This trade zone would, include the potential of breaking back down under this weekly high, which is what happened over here, right? They break under it ever so slightly, right? Hang on, I'll just move this so you can see it more easily. They broke below it ever so slightly. So we'll create a little bit of space, a little bit of wiggle room for that. And that's pretty much it for the SPY and the overall market. Again, no red flags. The only red flags are very minor. This oscillator extension, it's hot up into the weekly. It's pretty hot. But this can all cool off, right? Like if we just trade sideways for a bit, that'll all cool off. So, and the weekly time frame is due for a little bit of cooling off, right? That would be totally healthy. Ever since this last low, we've ripped 12%. So to trade sideways for a bit, that would be fine for like a couple months or whatever. That would be totally reasonable. If not healthy, I think it would be healthy. So that's pretty much it. I mean, depending on how much we retrace, obviously, if we consolidate for 3 months and we wipe off like 50% of the market, that's a different story. I still think it would be a buy, but that's neither here nor there right now. All right, so the Qs, I'm just gonna kill this for now because it obviously didn't come into our conservative trade zone, and we can adjust this as well. I thought I had already done this, but I guess I'm remembering wrong. So here's our new demand zone that we care about, right? This is the same exact logic that we do, that we did for SPY. It's the same exact logic every time, honestly. It never really changes. It doesn't change because that's just how markets have to work, right? You're either going to build areas of demand and break out, and then that's a fine, bull trend, or you're going to build areas of supply and break down over and over again. And as of right now, we're still building areas of demand and breaking out. Here you have an area of demand, trading sideways, breakout, area of demand, trading sideways, breakout, area of demand, trading sideways, and breakout. And I think what is very notable on the QQQ is, again, it's the same, right? The oscillators are extended, things are hot from that perspective, but at the same time, this is actually an even better looking trend than the SPY, which, is typically the case, right? Because S&P 500 stocks, right? So, when the market rally is not so broad, which it's not right now, right? It's primarily the mega cap stocks. When that's the case, then obviously all their holdings in the SPY kind of drag it back down. Whereas in the QQQ, there's only 100 stocks, right? And it's, weighted more towards the mega caps. It's like, what is it like? I forget, like Apple and Microsoft are like 20% of the, of the Nasdaq, right? And all of the Fang Man T names are still, doing quite well. So, and again, another way of looking at trends is, okay, so areas of demand breakout, areas of demand breakout, but also how much space is between each area of demand that's established is also a pretty good indication of how strong that trend is. And you'll notice that right now, the value areas of all of these sideways zones, right, or whatever, ranges, they're very far away from each other. Value is there's a big gap, right, between each time we trade sideways. So what does that suggest? That suggests that every time we break out, the sellers have an opportunity to try to defend against the buyers by taking prices back into the range that they just broke out of, and they failed so far, right? They didn't even touch the prior high over here, and then again they didn't even fill the gap here. So there's really no red flags for buyers right now. The only thing that bears have going for them is that the oscillators are hot, and again, these can cool off, right? On the weekly time frame, we haven't really traded sideways ever since here, so could very easily just start trading sideways and still be very healthy as long as you don't come back down under 449.34. Okay. All right, so a new trade zone today. I think this is fine. All right, something like this I think is pretty reasonable. Again, you always want that oscillator extension. I say it all the time, but it's worth mentioning. Who knows? Somebody might be new or whatever. I think something like this is fairly reasonable. Right, and then again, we don't have any like areas of supply to use as references, so we just have to go with our projection tools. I'm going to stick with the pivot points for now, and we're shooting for R2, right? So if we pull back down into here, again, get these oscillators, short-term oscillators extended, very reasonable trade zone, pretty low risk, and we're targeting that R2. Okay, so again, no red flags for buyers. All right, so on the Dow, looking like we probably won't get this. I mean, you never know. I don't predict. We never predict. I mean, you might if you want, but I won't predict ever. But I'm just gonna remove it for now. I still think it's a reasonable trade zone, but at this point, you know, it's the odds of us hitting it as a straight shot from there are pretty low. So let's just do the TA real quickly first. We're really just trading sideways, you know. So the Dow is not really doing much. Just trading sideways. The daily chart is bullish from a price action perspective, but as long as this supply is being problematic for these buyers, then they're not on the advance. So these buyers need to find acceptance over 395.27 in order to have confidence in picking up where they left off after having an inability to hold over here. I'm not going to create a trade zone here. I don't love that. I still think down there is the most reasonable. This one I still think is the most reasonable. I just doubt that it hits anytime soon. But you know, for me, the Dow, I would prefer to wait. I would prefer to wait for the buyers to overcome 395.27. Ideally, they get a nice follow through over here, and then I would be more interested in looking for backtest plays off of it. Pretty much the opposite of what's happened here, right? Over here, you break down from this structure, make a good amount of space, and then you spend a lot of buying power to get up to the point of control. If the opposite of that were to happen, then I would be more interested in a buy. Otherwise, you know, honestly, I still think down here is the most reasonable one because as of right now, we're still just trading sideways, you know, and the key bigger picture is, are we going to hold over the 2022 high? Because as long as we're holding over the 2022 high, well, then obviously higher prices relative to the 2022 high are being accepted. And as long as those higher prices are being accepted, then bigger picture, there's no problems. So I still think it makes the most sense down here because again, we're balancing, and that is really it for the Dow. No one ever talks to me about the Dow, so maybe we won't keep covering. I don't even know why I covered the Dow. Oh, because Laura used to do these, and I took it over, right? Okay. So IWM for the small caps, it's really still just stuck in no man's land. You know, like if you are in the Slack room with me, you know, if you're making these trades with me or whatever, we're doing fine, right? We're doing fine. We're day trading RTY positions. We're rolling those proceeds into IWM. If my thesis is correct and these smaller caps, if they get their run when rates start to get cut and the economy is still okay, that's pretty much the best case scenario, right? Because these guys all have a lot of debt. And so, you know, right now it's expensive. Their debt is expensive. But if rates start coming down, their debt gets cheaper again. And so, you know, I wouldn't be surprised if that's what these small caps are waiting for. Now, again, the caveat to this is, do the rates come down because the economy is jacked up, right? And they have to come down in order for, you know, people to have more access to capital and stimulate the economy? Or do the rates come down and the economy is fine and we're just, you know, it's just fine to bring rates down? That would be okay, right? Because we just want to normalize lending again, right? Although, you know, obviously I know there's no real normal, right? Obviously things are always dependent on the circumstances. But anyway, that's the soft landing scenario that the Fed has been talking about for forever now, ever since even during quantitative easing, right? They were talking about this soft landing, best case scenario. So as long as that is the case, then I'm gonna just keep looking to play RTY and then roll proceeds into the IWM to build a risk-free, quote unquote. It's not really risk-free, right? I took the risk to make those RTY plays and then I put the proceeds into the IWM, but I see those IWM shares as like free or whatever. Technically they're not, but anyway, they're paid for by proceeds from RTY. So bigger picture, nothing has changed. There's really no change. As long as we're still within these two guys, nothing has changed. And I'm honestly getting sick of talking about it. Like, because I do the streams in the room as well, and it's like I have to say it all the time. It's been ever since we've been it's been 7 months 7 months, right, where I just have to every time I do any kind of stream talk about these two structures in IWM and let no real changes occurred until one of these two guys are violated. So that continues to be the case right now. I'll show you what it looks like on the indices on my other chart, because it is marked up more. And so I'm just watching these two structures in the even shorter term, right? Because all of this price action so far has been a battle between these two. That being said, bigger picture, what we really care about is these two bands. So that's really it. The weekly higher low is set, but there's also potentially a weekly lower high. Anything under 209.77 will be good for one. And the sellers did close near the lows of last week. So if they were to break 199.88 next week, then that would be weekly retracement. Weekly lower high would be set. And this is potentially a head and shoulders pattern. And we're just looking for, again, if we confirm a downtrend on the weekly, break under this guy, eyes on here again. That's really it. So responsive trade down there is reasonable. Again, these responsive trades off of these structures, they have been very effective. So, that's still very much on the table. And that is really it for IWM. All right, moving on to the dollar here. So the dollar, this is still the problem. So the dollar, despite this very notable balance, this whole the demand zone, the point of control of this local supply has thus far rejected price. And so it's right back to eyeing this support down at 103.645 and then this big guy again. This area of demand is what made this low and this low and this low. And so again, we'll just watch these on the way up. This guy has yet to be tested, right? Sellers failed to touch down the highs of it. And so that's really it. Honestly, it's very similar to IWM, where IWM is being contained by those two structures, so is the dollar. And so as long as these two structures are containing a price for the dollar, there's really no meaningful change. And so that is really it. Space for a daily lower high, anything under 105.740 is going to be good for one. And that is it. Moving on to the VIX here. So this is notable, right? VIX got a green candle on Friday. The weekly candle is not green. Technically it's not green itself, but it did advance from close to close. So this is starting to show us some warning signs, right? The fact that the VIX is rising with the market, obviously the market went up as well. And it's not like hand in hand, but the fact that the market had a big green day and the VIX had a big green day, that just lets us know that people are starting to hedge their bets. So eyes on the VIX, right? Because if this pattern continues to persist, right, with the market moving higher and the VIX moving higher with it, okay, then we'll know more and more people are starting to expect some retracement, and that can kind of be a bit of a self-fulfilling prophecy, right? Because people will, if more and more folks are thinking about hedging their bets by buying the VIX, what are they also probably doing? They're also probably lining up, right? They're probably selling some of what they're holding as well. So we'll just stay, monitoring the VIX for that as a potential clue. Okay, so NVDA. For NVDA, this is notable, right? So again, there's no real weakness in the market. Fengmei T looks fine as well, but the fact that you're kind of struggling, right, to get back up to this area where there's a lot of volume trade at 132-ish is kind of a red flag. That being said, you look at other like semi names, even SMH, I believe, is looking better. So what does that suggest? That suggests there's like rotation, like LRCX. I think it's a semi name, right? No. Let's see. AMD had a green day, I believe. All right, and INTC had a green day, and I think TSM, no, but looks better. Anyway, my point is that within the semi, I think SMCI had an okay day. No. Oh, look at that. That's nice. That was given to a member in our group. Anyway, so even though NVDA doesn't look so great right now, I think there's still rotation happening in the semis. That being said, I did notice something on the Tom DeMark indicator. Let's see. So on the monthly time frame, we are working on a potential perfected 9. So if this bar, if this monthly candle closes 2 above here, so above 109, I'm sorry, above the candle from 2 candles prior, so 109.63. If we get a close over 109.63 at the end of this month, then that would mean that we have this perfected 9. And the monthly perfected 9 has been a pretty good signal for what you expect after a completed 9 is 1 to 4 bars of consolidation. So here's the perfected 9, 1, 2, 3 bars of consolidation, right? That's at minimum. All right. It could also just be a potential top. So here's the last perfected 8 and 9, and that did a great job of marking the high. It did a great job of marking the low as well. The last time after that, we have a perfected 8 and 9. So we don't get a perfected 8 here. We just get the 9, and you don't even get any consolidation. So that's just a continuation situation here. You again, it's not perfected, but you do get that consolidation. Perfected 9 consolidation. So the idea is you'll know that it's consolidation, that you should be looking out for the potential of 1 to 4 bars if you do not get a big breakout, right? So if you get this perfected 9 and then you do not get a breakout, especially if you get a higher high like this that doesn't see follow through, okay, now we're saying, okay, the odds of this 1 to 4 bar consolidation will improve, you know? So it's not a we're never predicting, right? We're just using these things as clues, right? So again, perfected 8 and 9, few bars consolidation, continuation. Perfected 8 and 9, few bars consolidation. And that's it. So a few bars, perfect 9, consolidation. So that is something I'm paying attention to, right? This is potentially perfected 9 here. But again, even if you were to start a series, a selling series to finish a 9, you know, that really wouldn't that be that big of a deal? Like here, for example, right? This was a okay, well, that was actually quite a bit of decline, 70%. But I mean structurally, right? Was this really a problematic selling? Not really, right? Because if you look at where the next area of demand is right here, they barely traded through it. There's much more meaningful demand over here, right? So you could argue that on the monthly time frame, right, when you're looking at this retracement, really here is a sideways structure that you didn't want to lose, right? This breakout was the real breakout that you didn't want to get negated, and it wasn't. You know, so just because we get that 9, if we get that 9, if we get perfected, if we see consolidation, if we see a sell series down to a 9, it might not be that big of a deal. You know, even if TD support breaks, you know, it might not be that big of a deal. So that's pretty much it for NVDA. Trade zones. You know, I guess it'd have to be here, right? Like things are at the point now where if you did happen to start drilling and making some lower lows here, you'd probably get oversold somewhere around here, or, you know, back in this guy. So I think something like this is pretty reasonable for NVDA. And if you're still in the runners from like down here, your stop should be no lower than here, under the weekly no change level. I'm talking about those trade ideas that were set up way long ago. Where are those guys? I don't know. Who cares? There was one here and there was one here, so I don't know. I'm sure they're around somewhere. This guy? Nope. That guy? Nope. I gotta be more organized with this stuff. Huh? I gotta get these guys more organized. They're not even showing. Oh, because of the split. That's why. Anyways, so that's really it, right? Would we have hourly oversold conditions here? I think we probably would. Yeah, they'd be oversold. So hourly extension into this area, I think pretty reasonable for NVDA. All right. Moving on here to Bitcoin. So Bitcoin, pretty happy, I guess, about that stop out. Initially, I wasn't quite so sure if it was the best idea. So remember, that's just the trade that was set up here, that was given to you guys on Sunday, May 12th. Excuse me. Sunday, May 12th. And so, yeah, at first I wasn't sure because it was daily oversold again here. So I was thinking about potentially just reinitiating it, but I wanted to focus on Ethereum, which, you know, we'll get to in a second here. But I'm happy about that, right? And I was fine with it either way, but, you know, obviously now with this new leg lower, you know, it wouldn't have stuck anyway. So not to say that it was wrong to hold it. Like, it would have been fine if we stopped out there as well. It still would have been a winner. But it was a nicer winner by stopping out the half over there. Okay, so what's happening right now, right? What are the sellers trying to get done? What is their goal, You know, their goal is to get back down under 53,000. This is the last area of demand that was created before this big breakout. All of this consolidation was following this big breakout. All of this price action is the sellers trying to negate this breakout. Okay, and so as of right now, despite the fact that they got really, really close down to it, so far it's a failure to do so. Very notable failure. So what are we looking out for now? The buyers want to get right back to business, right? And in order to get back to business, they have to get back into this range. In order for them to get back into this range, they have to negate this breakdown, right? I don't even care about the level because this little structure here did a great job of making this low. So we'll just use that as our reference. These buyers now, and just look. Just look at how reactive it is being right now, right? The key for these buyers now is to get back over this guy, which made this major low over here, and where we're clearly seeing a battle for it as of right now, right? Look at these POC tests. Look at these POC tests. So if these buyers can reclaim 56958.17, find acceptance over it, then they'll breathe a bit of a sigh of relief here, and we'll be looking for just more sideways consolidation like that. I'm not too interested in trading Bitcoin right now. I'd rather trade Ethereum, but let me just finish this TA here. So anything under 63801.26 is going to be good for that daily lower high. And even if they can overcome this guy, really where they want to get back over is 61003.36. That's the point of control of this structure here, sitting at the prior all-time high. All right. All right, so Ethereum, you know, unfortunately, I wasn't present when this occurred. I would have been very happy to live trade this, but, you know, whatever. It was a holiday, July 4th, and so I didn't because, you know, I would prefer to get I would prefer to start playing when everything was extended. So, like, I think the hourly was starting to get buried at that point here. Yeah, right. So I would have preferred to be playing with the hourly extension into these locations. And with crypto, I like to really refine the entries because I don't have complex orders. Actually, I think Coinbase does now have complex orders, but I just haven't gotten around. I'm still in my mind. I still feel like Coinbase doesn't. So, you know, I guess I should adapt to that. But honestly, it's not even a big part of my operations. The crypto is one of the smaller parts of my operation. You know, whatever, the retirement accounts are the biggest, and then the futures, and then the stocks, like intermediate swing trading stuff, you know, stuff that I do for the swing report, which if you're interested, links in the description below. The swing report is just a weekly publication. I will send out regular ideas every single week, at least 2 ideas. I keep them all. I watch them all, and then if I start trading any of them, then we'll do updates for it. Dan contributes as well, but it's not going to get you rich quick, but it will definitely teach you a process, something that you can use, you know, forever. So if you're interested, links in the description below. I'm not really sure how much longer, you know, yeah, I don't know. So anyway, for Ethereum, I would have preferred to be playing, like, you know, off of these lows here when things were getting beaten up. Now that hasn't happened. So as a result, what am I looking for now? I would actually prefer another leg down. Like, I would prefer to see something like this. Like, I would like to see a move back up here, reject from here, and then come back down, get the daily extended again, get all these guys extended again, and then I would be interested in taking a play. Now, if you just use this trade zone blindly and you're coming in, you know, whatever, 4-hour oversold or whatever, we typically use 4-hour for the crypto stuff. Then you could have been coming in there and there. Your average should be here. You should be about break even right now. If you get back up to the point of control, I would just chop that up. If you want to just, you know, see what this trade zone would shake out, I think that's reasonable as well, but I'm just a bit more of an active trader. So at this point now, you know, it's all about this guy, right? This 2717.89 level over here. This is what's super key. That's obviously because that's where this breakout occurred. All of this price action is trying to reverse this breakout, which obviously doesn't happen until they can get back under that level. So it's a notable miss. And just like over here, right, it's also a notable miss of the value area high of this big guy over here, excuse me. This big guy over here, right? So, you know, what does that mean? That means that, okay, they failed to get back to the breakout point. That's a failure on the seller's part. But these buyers have to get back over here now in order to negate the change of this breakout. That's 3233.75. So if you initiate in here, no later than here, should you be chopping it up? You can throw a stop under the low if you do get that exit. And then see if that is a potential monthly higher low. All right, they're barely clinging on. Actually, it's already a lower low. So wait, 809.41. Yeah, it's a little lower low with no follow through. But, you know, you smooth it out. actually, it's not even consolidating on that point. Anyway, that's pretty much it. I don't even mind waiting for a big old bounce. Like if we see a big old bounce on the daily or the weekly, I would be fine with doing that too. Like, so instead of seeing like a leg to cool things off a little bit and then another leg down to get things beaten up to look for an aggressive like bottom fishing play, I don't even mind just waiting to see if the buyers will step up a little bit and then create some space, look for a higher low play like that. That's fine too. Excuse me. Okay, so that's pretty much it for Ethereum. Moving on to GME, I'm getting kind of interested in GME, right? Because okay, so all of this price action is really just trying to decide whether or not this gap is going to be affirmed or not, right? So you get this gap, you get the close the gap over here, they balance in the gap for many sessions, you get a big follow through above it, and now all of this price action, which kind of has like a falling wedge look to it, is really just defense off of this structure, right? So this guy over here. So I feel like these are kind of missed opportunities, honestly. Like, that's not the best R, though. That's the thing, right? The R was, I would still prefer it deeper, right? I would still prefer if we could trade through this structure. Ideally, we fail here. Like, if we trade through this guy, but then again fail to touch down on this value area high of this structure, which is what happened over here, and then pop back over here, and then we look for pass back over plays like that. So, like, we balance, hold this guy, come back up to here, and then we look for a higher low play. That's the ideal situation if we're being a little bit patient. If we want to be aggressive, then it's still the same zone. I would still use the same exact zone. What is it here? Yeah, I would still use this same exact zone. Ideally, this will occur because if this happens, then you'll get the daily extended again, I believe. It's coming in straight shot up because, the chart is just wonky from GME being insane because it's relative strength, right? So it's based on this guy, this last move. But you would very likely have daily oversold conditions over here, and so that's really it. I'm just sticking with that, and if it doesn't come down, it doesn't come down. That's fine with me, because there will still be opportunity. Like if we rip over here like this and then fail to find acceptance over 46, fine. Then I'm willing to move this up and play off of this guy. But as of right now, I just it's more of a trade that could work than should work, and sometimes you'll miss them and they'll be painful. Like copper, I just missed copper because it didn't have the extension that I was looking for. The location was perfect. I was waiting for this location. I have the alert set up for it. It's a very key spot, the point of control of this big guy. I really wanted it there, but it just didn't set up perfectly. It didn't have the extension, and so I just passed on it. It's lame, and I think, honestly, there was hourly extension, so I guess that maybe I was being a bit too picky, but being picky in Q2 has been very good for me. So no regrets. But anyway, so that's pretty much it for GME. Either we wait for a big old bounce and then we'll have more confidence playing down here, bottom fishing off this structure and this structure, or we just wait for a leg down, get things beaten up, and then we'll be playing off of this guy. All right. Okay, CCJ, still just in those 48 puts. I forget when they expire. They expire July 19th. So I'm still just in those 48 puts. I'd be happy to just take assignment, honestly, at 48 because I already cleared like 450 in credit. So that brings us down to 44 and change. That'd be fine. So I really like that. Like if you want to hold an asset or something and maybe you already have shares, or even if you don't, if you sell like puts, right? You're saying I'm okay with taking 100 shares at whatever strike you sell it at. You'll keep the credit either way, and so even if you get assigned at that strike, you will have a little bit of credit to offset the cost of it. So in this example, I just sold 4 CSPs for 48 bucks when we were doing here, and we were making this move down, and then on this move up, I just closed like 3 of them, and that was like, I think that was like 450. I might be overestimating. I think it was actually less, like 3. Either way, that offsets the cost, right, of the shares if I do take assignment at 48. So, wait, what am I saying? That is a trade in our trade room. That was not a public one. So never mind. If you're interested in that and you're in our Slack, just search in the Uranium channel. Just search CCJ from Lamont in Uranium, and it'll pop up. So ignore that. I guess I forget everything that I just said. People who aren't in our Slack room. Anyway, so I still think this is very reasonable, right? Where you just popped and dropped in the all-time high over here, right? Over this guy, no follow through, and now we don't need this yellow line. And now we are just making our way down, testing this key area of demand over here. This is notable, to continue to hold the value area low of this guy over here. It's this structure sitting at the prior all-time high. So to continue to find acceptance over the value area low is good defense off of that structure, but buyers want to find acceptance over 50.22 to have confidence in that structure acting as demand. So I still like it down here. Again, the recipe for what I like to do, extension into location, right? So this is the location. We're very happy with that location. I think it's a very good location, but do we have extension yet? We do not. So ideally, we'll get that leg down and into the location, and ideally have things extended, and then that would have me interested in making plays off of this demand zone. And this demand zone is pretty much also representative of the value area high and the point of control of this massive guy. And so holding over this big guy, obviously bigger picture, that would be ideal for these buyers. Okay, that is it for CCJ. Moving on to TAN. So TAN, it's in the trade zone. Again, extension into location. We included a potential lower low that might lack follow through. I don't think that was actually a lower low here, but that is why it is actually a lower low that lacks follow through. So that is why we plan for that kind of an event, because, essentially that's how the markets just kind of work, right? Like, this is the area of demand. It's key. Ideally, you'll hold it. But when the other side starts getting hot and heavy, really pressing the issue, a lot of times they'll look to essentially sweep, right? This liquidity, right? I think people call it that, actually, liquidity sweep. I forget who calls it that, but I think folks do call it that. Essentially, you have liquidity there, and so the sellers will try to take all that liquidity, essentially, and then if you're going to see follow through on that, well, then obviously they shouldn't get back over 42.02. So at this point now, if they can't get back over 42.02, we should expect another test of this low over here at 38.83. If you tick this trade zone, assuming you went completely blind here and here, you already had some opportunity to get risk-free with your stop under the low. If you're using it, again, I just make sure that these things are extended when you're using these levels. So if we do happen to find acceptance over 39.98 and we can overcome 42.02, then these buyers should be trying to come here. That's why the target is obviously based on the value area high of this big structure over here. And that is really it. Okay, a bigger picture, it could be a falling wedge, Lower low, no follow through, lower low, no follow through, lower low, no follow through. Could be looking at a falling wedge. It's not high on my priority list, 10, but yeah, if you are going to trade TAN, the solar names, I think it's FSLR and SE. I forget. FSLR is one of the strong ones, though. Like, you probably want to get picky here and zoom in and pick a specific operator, because FSLR looks so much better than TAN, right? All FSLR is just backtesting this area of demand, whereas TAN is, you have so much supply overhead because most of the holdings in TAN are not doing so well. All right, so that is pretty much it. And then for MSOs finally, so MSO, we don't need this guy right now, but I will be better about it and organize it. Oh, I did it this time. Nice. Okay, so here's the trade zone that was shared, sometime in here. Came into the trade zone, got to the target. Obviously, only got that one, flirted with it. I still think that this is really the key structure. Honestly, I'm not trading MSOs. I don't like the look of it, personally. And I guess I should bring back that conservative zone, because if you're new here, honestly, I wouldn't even stay in this one. Like, if you bought this, chopped it up, throw your stop right under there. I don't even want to use these levels anymore. Again, because I want that location and the extension. So at this point now, you wouldn't have that extension until you're back down here. I think, yeah, you probably wouldn't. Yeah, you need another move down. So I still think this is reasonable, but now you're dealing with the potential of black dirt breakdown. So just like TAN, specific holdings within TAN are probably easier to operate with. The same can be said for MSOs. There are some names in MSOs that just looks a lot better, like TCNNF. Right, it's way off of the lows, right, and it's still holding this key structure. So as long as we're holding over this guy, we should expect this, which is what we were looking for way back when, right? We were looking at, you see, this structure is pretty much exactly the same as this in TCNN. Oops. As this, right? Are these two guys like not practically exactly the same, right? they're practically the same, you know? And so let's use this fella as a reference, just like we were doing it over here. We were saying, hey, listen, as long as we hold over this guy, we should expect price action like this, right? And then we can hold over this guy, so now we're expecting price action like this. You look at TCNNF, right? And it's still doing it. It's still holding over here. So we're still expecting price action like this. And you can see even recently there has been battles and hold for it. So, you know, if you're in MSOs or if you're interested in MSOs, I think it's, you know, it's probably better to look within the space and play the leaders. Curlip is kind of doing that as well. Kira. Wow, GTBIF is actually holding up really well. What the heck? Okay, so for example, GTBIF is really, I mean, it's still many percent off of the highs, but it is still just in this large holding pattern near the highs. Hold on a second here. This is wild to me. I didn't expect this. It's still 70% off the highs. 85%. So yeah, GTBIF looks pretty good. So anyway, that's the idea for MSOs. You know, if you insist on trading the ETF here, then it is still down here where I'd be most interested. I still think this is a very reasonable trade zone, just waiting for that leg down, extension to the location. And that's really it. That is it, my friends. All right, so anyway, that's all I got for you this week. I appreciate you tuning in. Thank you for sharing some of your time and energy with me. If you got anything out of that video at all, we would very much appreciate a like and subscribe. Helps us out a lot. You know, helps us keep giving you free content. And if you're interested in joining a incredibly robust community, tons of traders, hundreds of traders, nearly 1,000 traders, many of whom are full-timers. I would say probably like 5 to 10% of us are full-timers. We're there day in and day out. Even during short and holiday weeks, we are still degenning it in there. So if you're interested in looking for or finding a community where you can hone the craft and, you know, just make some friends or whatever, and then check us out, chartguys.com, links in the description below. Otherwise, that's it, and I hope to see you guys next week. Farewell.